Good morning and welcome, Patriot Radio News Hour. Joe and Jason on this Tuesday, March the 28th. And man, I'll tell you what, just like I told you, buy those pullbacks. Gold up very strong here this morning. Silver's up as well. As I said, nothing's been fixed. Don't be fooled. This is really something that's going to play out very unfortunately, I think very, very quickly. We're gonna get into Edward Dowd today. We're gonna actually have a show here that will extend into the half-empty cup today. Jeffrey Gundlach, both of them saying emergency. Listen to this: emergency rate cuts as early as June. This is, I mean, of course, right now, listen, I still think the Fed thinks they're raising in May, and yet very respected people in the industry saying they see something the exact opposite. We'll break it all down for you. 800-951-0592 is the toll-free number. You know what we do. It's the physical delivery of wealth insurance. And man, think about that wealth insurance, because you got all kinds of this. You can call my son Joey and get life insurance. Heck, you can get what do you call it? Long-term care insurance, right? You get car insurance and mortgage insurance and renter's insurance and liability insurance, right? I mean, there's all insurance. But no, you don't have wealth insurance. Well, you do, and that's the physical metal itself. And if anything, again, if people forget history, right? People want to forget about 2008. And then we got a little reminder here in the last few weeks just how fragile this system really, really is. And listen, Edward Dowd is going to make it so simple. And I've said it over and over and over again, Jason. This isn't the financial crisis. That was complicated. This is not. I'm sorry. This is not complicated. And again, the bankers that promised us that they were looking out for us, where were they? It's funny. Have you heard the Fed about Silicon Valley Bank? Oh, this is just pure mismanagement. What? Are they being arrested? No. Nope. You want to know why they're not being arrested? Because they didn't break the law. They were actually operating within the regulations that you set forth. Where were you, San Francisco Fed? I did the math. There's only 4,000 banks. The vast majority of them are on the East Coast, right? Because that's where Wall Street is. But even if I said, you know what, we've got 12 regional Fed banks. If you divided it up evenly, there'd be about 330 banks, give or take, in each Fed region. Which means that you could audit, less than one bank audit a day. Now, the San Francisco Fed employs thousands, hundreds, if not thousands of people. Where were they? Right? And again, like I said, they aren't there for us. They have no clue. These guys are absolutely clueless as to what is going on. And that is why you need to have your gold and silver put away. And listen, if these guys are right, which, let's face it, I mean, Jeffrey Gundlach, I have talked about this man for 2 decades. This is who the billionaires go to. Edward Dowd, his company does some of the best. You know what I like about him? He's not a doom and gloomer like me. He's not a doom and gloomer like Jason, right? He's more of a Gundlach. Gundlach says it all the time. He says, listen, I'm just telling you what the data says. That's all I'm telling you. Right? Do with it as you like. I'm just telling you what the data is telling us, and this is how I'm making these decisions. And Jason, I'll say this. We're going to play a bunch of clips, but if you want to go out to allamericangold.com, We had Edward Dowd on yesterday's website. So if you just keep scrolling down, you'll see it. The whole thing's like 47 minutes. We're not playing anything close to that. But he talks about how many banks are going to be left. He talks about, hey, there's a lot more bank failures coming than the central bank really has in mind. He talks about the digital currency, money supplies, the end of small business. These are all the things that we're going to cover in the next, hour plus. Because like I said, we'll go into the half empty cup with this as well.
Yeah, Joe, and I don't know if I'm I guess a traditional doom and gloomer. I just accepted that the whole thing is rigged. It's all been bought up and paid for. And so none of this surprises me. I'm just not surprised. The only thing I try to do every day is try to figure out the direction in which we're headed currently, because I know where sort of it's going to end up, or where it's going in the end, which is just lower standard of living, less freedoms, less liberties. And I just try to get people to understand it, because if you get enough people rising up and getting mad about it, then it will change. But until that day, Joe, we got to help people fashion out the best situation possible, because we can't end the Federal Reserve Bank. We just can't do it ourselves. But we can show you how to sort of fortify yourself to it.
Absolutely right. I'm going to give out that number again, 800-951-0592. Joe and Jason, we're coming right back. By the way, before we get into Edward Dowd, a major announcement between China and Saudi Arabia today. I'll tell you about that next. Eight 800-951-0592, Joe and Jason, Patriot Radio News Hour. Quick look in at the markets today. The Dow didn't have a great day yesterday, finished in positive territory, barely, tried to rally today. That doesn't look so good, but right now it's up 50. But the S&P's down 7, the Nasdaq's down 70, gold's up 18, 1972, silver's up 21. $23.25. This market update brought to you by our friends at YRefi. Man, when you sit there and you think about where you have to be, there's three places to be, right? There's gold and silver, right? That's calling us here at Patriot. You got 401ks, IRAs, insurance. That's tax planning. All that stuff. That's Joey. But then you got that other stuff, right? Maybe you've got IRAs. Then you're tired of it being in Wall Street. Maybe you've got too much money in the bank or in a money market. Check out, if you got $50,000 or more, you got to check out our buddies at YRefi, because they're not correlated to the stock market. They don't care. They don't care. Jay Powell's got to have emergency rate cuts in the next, 60 to 90 days. They don't care. Check them out. InvestYRefi.com. You can get up to 10.25%. Listen, if you only want to do it for a year, a money market, Northwestern Mutual's got the best money markets around, and Joey, the next time we have him on, he's going to talk about that. They give you 4.5%. These guys, if you want to do it for a year, they'll give you 6.25%, right? If you do it for 5 years, 10.25. I mean, think about this. Your monthly income, you can turn it on, you can turn it off. It gets compounded. You can choose what you want to do. The interest is compounded daily. You're paid monthly if that's what you want to do. And there's no fees. No fees. Who does that? Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com, or 888-YRefi24. And Jason, before we get to Edward Dowd, we got to talk about a huge, this thing is huge, announcement between Saudi Arabia and China. We know that the Saudis and the Chinese, there's the meetings, what was it? Maybe 60 days ago, 90 days ago, something like that. Xi Jinping and the Saudi king talking about, hey, we're getting ready. We're getting ready. We're going to start allowing China to buy oil in renminbis, that's a massive deal. And to give you an idea, today, what is being called the huge push, Saudi state-owned petrochemical company, Saudi Aramco, surprised the world with a double header of pro-China news. First, Aramco says it's going to build a $10 billion refinery in China. This refinery is going to produce like 400 to 500,000 barrels a day, 400 to 500,000 barrels a day of energy. By the way, Saudi Aramco says, by the way, we'll be the one supplying the oil for that. In addition to that, they also announced that they will build a 10% stake in China's largest oil refinery, the same company who obviously is going to be operating the oil refinery. And Jason, again here now, allegiances and ties being developed with China and Saudi Arabia. And you got to remember, we really don't buy a lot of Saudi oil. China by far is Saudi Arabia's biggest buyer of products. And now, Jason, they're getting even closer.
Right. And the original deal with the petrodollar was that anything Saudi Arabia sold, and some of these other countries that joined in later, they're supposed to buy it in dollars. So when you already have economic stress, building in America, and maybe Saudi Arabia is like, well, we will buy this stuff and we'll sell it in something else if that's what China wants, right? That's going to create a big problem. This is another one of the major reasons that I think the inflation is going to come back really hard here in the near or even later this year and early next year, because the foreign holdings of dollars seems to be shrinking a lot, and that there's one place you can spend dollars no matter what, Joe. And if you bring them here, then what's that going to do to the prices of goods and services, Joe?
Listen, China's been selling off these treasuries. I think we kind of know why now, don't we? But they just don't need that much. Think about this. They've agreed, Saudi Aramco has agreed to provide 480,000 barrels a day to this new refinery complex in eastern China. 480,000 barrels of crude oil a day. And guess how long they've agreed to do it? 20 years. So think about 500,000 barrels a day, essentially, for the next 20 years. This is something, again, where I think, again, this is just looking ahead here, less reasons for dollars. And why is oil so important? I don't think people understand how much more oil is bought and sold than anything else. It's so much bigger than corn or soybeans or gold or silver. This is predominantly what people hold dollars for, is to buy energy. So this is a major development over the last 24 hours. Back-to-back deals, $10 billion to build this refinery. This refinery is going to refine up to, I want to say it was like 400,000 barrels a day. Then they announced, hey, we're going to provide 480,000 barrels a day to this province where we're building this refinery, and we're going to do it for the next 20 years. And oh, by the way, we're also going to buy a 10% stake in the refining company in China. So, Jason, another one of these developments where we're seeing the rest of the world getting ready to adjust to this new world. Well, listen, I don't want to have people think, oh, the dollar's going to, we're not saying that. It is. I guess I am saying, because it's going to be digital, right? Come July, it's going to be digital. But what we're saying is the dollar used to buy like 80% of the world's stuff. It's like in the 60s now. We're going to see a world here very quickly, Jay. We're probably going to be maybe 50%, maybe 45%. And that is devastating to a country that has the debt that we have, that relies on foreigners to buy it.
Yeah, and I get the feeling the rest of this year and next year, I think you'll see some of these geopolitical economic deals being made. They might accelerate, Joe. We'll see it accelerate, because you never know who will be president elected in 2024, starting 2025. So there'll be a lot of fireworks when it comes to this sort of thing. I mean, China's been busy. I mean, I haven't seen China be so busy traveling around the world, talking to the Russians and talking to China, or talking to Saudi Arabia. It's just, we talk great financial reset. That means a lot of work has to be done, right, Joe? You got to change things, and you said 50%. When the whole thing changes, digital dollars might be 40%. Who knows? Who knows what it has to be? They might realign it to whatever your piece of the pie of the world is. If America globally is 40% of the world's economy, then that's probably what they would reset it at, wouldn't you think?
Well, no, I don't. Gosh, that'd be worse. I don't want that to happen. I still think. Listen, I think we know Europe's weak, Japan is weak, Britain is weak, right? China's gonna take a big share here. Got to remember right now, China's only doing like 2.5%, 3%. So even if they added another 10%, right? That's kind of what I'm thinking, right? A 10%, maybe 12, maybe they get up to 12 or 15% of global trade. What you're talking about is like, hey, China's going to get up to 20, 25%. I mean, I don't see that how about this? In the next 5 to 10 years, I don't think so. Maybe 20 or 30 years from now, maybe, right? Maybe that happens because put it this way, any scenario, doesn't matter whether it's, hey, they only get to 10%, which is probably, I think, best case scenario for us. That's still very damaging, right? Because that puts all of a sudden the dollar down to maybe 50% of transactions. Any amount is damaging. That's the big problem.
Well, do you think the people in the Americans in the late 30s, or just the people of the world in the late 30s, thought that there would be such a global monetary change by the end of World War II? Because that's kind of what I see, Joe. You attach it to something big, and then you can just rearrange the economic pieces wherever you wish once it's over. Yeah. And who knows what this is going to be? I've been hearing of a cyber war. Cyber World War III has already started, right? That this might be a cybernetic war, an info war, so to speak, and. So who knows, Joe? What emergency will emerge alongside this? I was looking at the Ukraine war more, and how that can blow up into something much bigger in different parts of the world too. So yeah, you're right. It won't change by itself as fast as I just said, Joe, but it will change that fast if they do something major.
Well, it's funny. Edward Dowd talks about quickly and how bad quickly can be. Really quick, before the break, I'm going to play the very first part of it. This is Edward Dowd talking about the Fed is going to have to enact emergency rate cuts. Jack, let's play this first clip.
I'm a market student, and when the market tells me something, I pay attention. And the market's saying that Fed Chairman Powell is probably going to have to not only just pause, but start cutting. And if this futures interest rate curve holds, I see an emergency Fed rate cut sometime in the next 3 months at a bare minimum. That's my prediction. And the other thing that I want to touch on that's very grim. And again, look, I'm not someone that likes to be gloom and doom. I just study the facts and the asset markets and the economy. My team at Finance Technologies, we do a lot of deep dive economic analysis. We called a recession in November of last year. And at the time, we saw a recession that was going to be more on the order of the 2000, 2001 recession and the 1990 recession. Now, unfortunately, we're looking for a hard recession. Hopefully nothing systemic like the great financial crisis, but that remains to be seen. What happened in November of 2022 was very grim. The money supply M2 year-over-year growth rate went negative. And why is that important? That's only happened 5 times since 1868, including this one. The last time this occurred was 1930, the Great Depression. So this is a big deal, and it's an indication that credit is contracting at a very fast pace.
Okay.
And the lifeblood of all our economies is credit.
Absolutely. And I want to break down that M2 thesis and what it means, but I just want to highlight what you said. You expect an emergency rate cut within the next 3 months.
Correct. Now,
what would likely prompt that?
Continued economic deterioration, more bank failures, something happening globally out of the Fed's control, like a sovereign debt crisis and or another major European bank going under. Again, what's happened is was totally predictable. When you raise interest rates after 14 years of zero interest rates up 500 basis points in 12 months, you have bond losses in what are called safe. Even Treasury bonds that are safe from a credit perspective have massive losses. So this is a duration problem. There's different types of risk in bonds. There's credit risk, which was the great financial crisis. This is interest rate risk or duration risk, and it's just bond math. And when you buy a bond at 1% and it goes to 5%, you've lost a lot of money. Just that, and so these bonds on the bank's balance sheets and speculators' balance sheets have lost a tremendous amount of money.
Yeah, and you're anticipating a total of 4 cuts this year?
That's what the market's saying as of yesterday.
We'll be back. Wow, that's a lot to digest. Patriot Radio News Hour. Joe and Jason will be right back.